Bitcoin knocking on the door of the 2025 yearly open. It's going to be a level that decides who controls the rest of the year. If the bulls hold it, we're going to bounce upward. If they don't, the steamroller is coming, and it's coming hard. The next few candles are going to be deciding everything, and volatility is loading. Welcome back, Crypto Crew. It's your boy Tom here, bringing you the hottest of Bitcoin and crypto action. If you like what you see, give us a like. Make sure you hit subscribe if you have not already. And make sure you come on over to X and follow us on X, where we talk about Bitcoin, crypto all day, every day. All right, let's get right into it. It is Sunday. Chill out. Market's basically sitting right at 95,000, a very, very important point. But we're not going to expect any real fireworks today unless something happens. Now we got to keep an eye on what's going on by Venezuela off the southern coast of the United States. There's a carrier group there, so we could get a little bit of fireworks there. Most people are saying it's definitely going to happen within the next 36 hours. Let's see. But that's going to affect Bitcoin. So we got another thing on the table that we have to be, just cognizant of. All right. So right now, as it stands, Bitcoin is back where it started, the 2025 yearly open. Not great. Not great. Nobody likes to give back gains. The people just are like that. I could tell you stories, with clients, well, we had a client, it was Ferrero, which was basically they make Tic Tac, the little mints. They were one of our corporate people that we had that we used to do FOREX for, and never forget it. Like we basically managed their account. We had like a good, like a 12% gain for the year on the account. But at one point, for them, we had an account value that was up like 36%. And all they kept talking about is how we lost over 20% for them for the year. Meanwhile, they were up. They were up 12. But anyway, that's just the way people are. Anyway, right? They don't like to give up gains. Right now, as I said, it's not great, but it could be really an old market law coming into effect. Now, look, I'm going into theory now, all right? There's a law out there that says basically markets cover the same ground twice, all right? And okay, we are now definitely covering the same ground twice. Now, whether we break down or not or break up is going to be all decided on what happens, the battleground itself. Now, here's what's really revealing. As I'm building on what I just said about, how people don't like to give back gains. And it's all part of the game of trading, right? I mean, you got to be willing to sacrifice some win, an amount of money for additional gains. So you're always looking to sacrifice some profits for additional gains in the market. But right now we're down right where we started from, and like I said, people don't like it. And as it stands, like if we're looking at Bitcoin historically, we could say this correction is 25% so far. Okay, but sentiment makes it feel like it's 60% down out there. Now, previous dips, 33 and 32% corrections. So structurally, nothing has really changed in Bitcoin. It's okay. It's the same. I mean, it's nothing new. It's not great. Nobody likes it. If you're a bull, you don't like it. If you're a bear, you're loving every second of it. And you're looking for the 32, 33, 35, 45% correction. Great. That's trading, right? And I'm just going to say it. You're going to have to trade this. All right, it's at a point now where it's just no longer smooth sailing. We're in a chop. We discussed it yesterday. That Bitcoin is either it doesn't move up as much as it stays in a chop zone, and that's why you listen to us, or different pundits like myself to try to get a handle on things, right? So we try to give you the best handle on the whole situation, where we go over long term and we go over short term. So right now we're talking, this is a weekly chart. So it's kind of middle of the road. It's not super long, but it's definitely not short. But right now what we're saying, short term, I should clarify. Right now we're saying that the correction is 25% so far. So it's normal Bitcoin behavior. But really, the panic is louder than ever right now. So emotionally, people are acting like, oh my God, they've never seen anything like this before. The sky is falling. but the price action is actually milder right now than previous cycles. I'm not saying it's great. I'm not saying that at all. I'm just saying that it's milder, right? And historically, fear at this intensity becomes one of the best signals for Bitcoin. Now, that's emotionality that I'm talking about there. So, if we let's get into the 2 hour chart work and let's do the chart work because we can basically get the points that we need to get over on points that need to hold, or good old Tom's going to be singing the Ed Sakota "What You're Going to Do When the Drawdown Comes" song. All right, so right now here it stands. 90 overall. I gave you this level a few days ago. The horizontal line that, some people say does not belong there, but I'm going to tell you that definitely belongs there. 91,000 is a very important structural low. And I told you why. It was a low that occurred, and I'll tell you exactly the date that it occurred at. It occurred on February 3rd, 2025. Important point. Because from that point, we could only get up to 98,826. That is right now, and that occurred on February 14th, 2025. So that is actually the resistance point that we have right now. That good old horizontal line that I got up there that some people say really doesn't belong there, but it does belong there. That is resistance. So in order for Bitcoin to show any type of reprieve from this, we got to get over 98. Now there's some glimmers of hope, but it's not it's not fully green lights right now. You're gonna have to trade it. All right? You're gonna have to trade it, unfortunately. All right? So now here's the thing. Fortunately, you could join our pro group. If you want to see how we deploy capital, I'll show you how to do that later. All right? That's one, you got one option there. There's plenty of other people you can join if you want to join the, 19-year-old guy driving the Ferrari, like throwing money out the window. You could do that too. Follow that guy. You could do that. He's on Instatrash, or maybe he's on Tic Tac Tac, or whatever it's called. The 5-minute videos. You can follow that dude. You know what I mean? I'm sure he's not renting that Ferrari. Nah, of course not. Probably made it on the last bull run from 30,000 or something, Yeah, he's only 19. He probably started when he was 12. Could be possible. But anyway, right now as it stands, Bitcoin support, short-term support sits right at 94, okay? Now we have not closed the CME market gap at 92 yet. Let's go over there. Let's check those things out. Where are those gaps? Here they are. Okay, 97,000. Yeah, check, filled. All right, 92, not yet. Critical level. Do I think the black hats are going to push it? They're going to do their best they can to push it down. They, very astute commenter on our YouTube said something that was absolutely true that I kind of went over in previous videos, but it was good to see another, mind say the same thing. That basically I was thinking that BlackRock doesn't care about you. They want to drive it down and they want to inflict the maximum amount of pain because they want to control all of it. In yesterday's video, I told you, congratulations, you wanted Wall Street, you got it. They want the whole shebang, man. They don't care about you. They want the whole shebang. They don't look to share. They're not, groups of people that actually share. Okay, they don't look to share. They look to steal. They look to hold and hoard everything. That's going to be their downfall, by the way, anyway. But anyway, so as it stands right now, 92,000 has not been filled yet. But if we look at this, what do we have to? Let's go back over to our 2 hour, okay? Our 2 hour chart. All right, so as it stands, it would be great if we could hold this 90, what? I think we went down to 94,000, like even or something, 94,012 according to this chart. So really, the first level that we need to get over for a reprieve, okay, is that 98 or 97 right here, this 97. That would be great, 98,000. Now, look at what's going on here. Let's open up the price action. Let's just get this to be a little bit bigger so we can like zero in on this. We have been really nothing but kind of sideways right now. So if we look at the structure that we have right now, we got the low. We got a lower high. We have a higher low, which is what structurally is a good thing. It's a good thing, but really hasn't, it hasn't popped up and created a higher high yet. So really right now we are basically still in chop zone. So here's the level that's very important right now. Short term is this level right there at, what's this low right here? Was ist los? That's German for what's wrong. Not what's this low, but anyway, sounds like it. What's this low? What's this low? What's this low? 94,841. I don't know. Sorry, it's Sunday. Got a lot of espresso. A little giddy. It's a nice day. It's a little giddy, but and of course we got the resistance right now at 96. Got to pop through that. Get through the 98. Now, if we don't, we turn down through this low here, 94. We're going to be going into the CME market gaps. Yep. I don't think that we're going to hit 90,000 real quick. Matter of fact, I think it's stabilizing a little bit. Like I said, there's some glimmer of hope on the short term, but it's only leading to 100,000 right now. So right now, if we look, we're sitting really at that 6-month low. The total crypto market cap right now is 3.27 trillion. It's risk off across everything right now. ETF outflows are heavy. Hundreds of millions are leaving the Bitcoin funds. Now, that happened last week, and I told you got to pay attention to this IBIT. This is BlackRock, okay? That's their shares. So I gave you that as an early warning type of indicator. Look, we're below the level that I said had hold. It didn't. We're trading actually down to the all-important level. It's like really at let's go down. Where is it? It's like right in here. 50, right here. Fill this gap, 50. Man, okay. So as it stands, 50 is the next level. Well, there's two levels. Okay, what did we close at here? I think we closed at 53. All right, so 55 is now resistance. 50 is now support. If we can get above 55, that would be good, but we need to get over, okay, the 57, 58, and really we need to get over 62 and 64. A lot of wood to chop again. Okay, but now this could turn on a dime. Like this marketplace could turn on an instant. Something comes out and, we could start moving higher again off these lows. But right now, as it stands, fear and greed, extreme fear territory. Bitcoin structure is fragile. Everybody feels it. We can't deny it. It is what it is. Okay, just got to trade through it. So now, if we look overall, let me get over to that point. Let me get over to this here. I'm going to get into this in a second right now. But let's go over overall why, why Bitcoin's being dumped. Okay? Now, risk assets across the board are being dumped. Tech stocks, red. High beta assets, red. Leading to crypto, the deepest red right now. Okay? Rate cuts. Rate cut hopes were fading. Market now sees a 50% chance of a December rate cut. Liquidity expectations reset lower. All right. Long positions unwound. Derivatives positioning is starting to thin. It's the end of the year as well. That's another freaking problem we got. Market depth, shallow. So every sell hits harder. Now, the technical levels that we got to watch are right here, the 95, the 92. We break it, we open up the 90. Okay, we hold it. We could probably get up to 100,000. It's on the table. It's a truly battleground right now. It truly is. Now, as I said, the CME market gap, 92,000 still open. And here, now this is short term. It's a 12-hour chart. Let me point to it up here. 12-hour chart. Okay? This is not long term. We got a bit of bullish divergence right now. Now, we could see the spark of the bullish divergence, right? But this only means that we may be able to get up to 100,000 resistance. Now, it will turn into a great signal if the coin could get above 100,000 and hold. Right now, it's just a short-term signal saying 12 hours, yeah, we got a shot that we can run back up towards 100,000. There's heavy resistance up there. Now, let's talk about the real market drivers before we go any further. The forces that are behind the scenes that really are going to shape the next 6 months in crypto. Now, of course, those can change because there's always new things that come into the marketplace. But as of right now, what's happening isn't random. It's liquidity, it's policy, it's macro positioning, all shifting at once. Plus, we got the end of the year problem. Okay? A lot of stuff we got to get through, right? So as the government reopens, the Fed is finally going to get to seeing some government generated economic data again. Not that they didn't see it. I mean, they've seen it. It means it, but they'll be releasing it out to us. So that will actually offer us some more better forecasting, better clarity for the rate cuts. Let me just move this over a little bit. I don't like seeing those little dots on the side. So ultimately, we should get some better clarity and more cuts. Now, we expect additional rate cuts over the next 6 months as the Fed responds to cooling data and some recessionary signals. Now, what we got going for us right now, because that's going to be a longer term. What's going to be going for us right now in the shorter term? The TGA unlocks $1 trillion in spending. That's the Treasury General account. Is basically the U.S. government's checking account. It's sitting at $1 trillion right now. I said this yesterday. Because of the shutdown, they couldn't spend it. But now the money can flow back into the system. And when the U.S. government starts spending again, liquidity goes up, not down. So that helps. Okay, now. Oh, I want to point you to this. This is really important. This is something that really is I think it's the wild card that, the market keeps underestimating. It's an older article, but I was looking at this and I said, look at this. I mean, this is important because it hasn't changed. Companies and governments are going to raise capital because we're talking about the AI arms race and the global money printer. Okay, this is going to create more liquidity. It's going to be a liquidity event all on its own. Now it's just starting up. So again, I'm going from the Treasury General account that's actually going to open up some liquidity now. Now again, we got to keep our eye on this because many U.S. built AI systems fall short, but are competing against tech giants. Neither easy nor cheap right here. So right here we see this little thing. Governments are spending billions on their own sovereign AI technologies. Is it a big waste of money is the article, right? But obviously when the governments go into something, they just don't quit right away. They pour tremendous amounts of money in it. So what that's going to do is the government's going to raise capital. They're going to issue debt, of course. They're going to print money, of course. They're going to deploy cash at unprecedented levels. And they're going to build infrastructure at insane paces. Like I said, this is going to be a liquidity event all on its own. So we got to keep an eye on that as well. Because what we're saying is all roads lead to what? M2 growth. This is what we're getting at. All right, M2, liquidity. Once liquidity starts going and all these three forces start kicking in, lower rates, TGA spending unlocking, which is going to happen immediately, massive AI capital flow. It's going to pump more money into the global financial system. And here's the punchline. And we've been saying it all along. When global money supply goes up, scarce assets like Bitcoin move with it. That's simple. So this is why Bitcoin always leads. It's the cleanest, most direct play on global liquidity cycles. Now, I know I had a lot of people, we discussed it yesterday. People said, Tom, you told us the money supply, we should be going up. We had a government shutdown. I explained it yesterday. Did my rant yesterday. I'm not going to do a rant today, but I understand the frustrations. But look, I'm going to tell you something. Here's an old Wall Street saying. I got to remember it, so I got to pause and think how it goes. Forecasting is somewhat of a science. Trading is somewhat of an art. Forecasting has to be deliberate. In your forecasting. In trading, you must be alert to the contradictions. Forecasting sows the seed. Trading reaps the harvest. Forecasting lays the foundation. Trading builds the structure. I I came across that in my reading of my old diary the other day. I said, well, that's really good. I got to tell the crypto crew about that. That is very, very true. So I just told you. So hopefully you like it. But anyway, let's move on over to good old Ethereum. Ethereum, man. Ethereum, make or break, man. Trading right now at, 3,174. Ethereum's holding the line at the moment, man. You have to, Ethereum is structurally weaker. It has less liquidity. It's got thinner books than Bitcoin, yet it's holding up. Now, ETF outflows and low demand add pressure as of now because of Bitcoin dominance. Okay, we're going to get into that in a second. So right now, critical level 3,000. We lose that 2,800 real fast. Hold it. We reclaim 3,300. We got a chance that Ethereum could actually start to move higher. Now, here's the thing. Right now, Ethereum isn't in control. It's reacting because of what's going on in Bitcoin, right? But here's the thing. Ethereum is entering one of the most important upgrades in the year, okay, or upgrades in years, the Fusaka upgrade. Now, if this works, it could redefine Ethereum's throughput and utility. If it fails, it could drag the narrative. Right now, it's looking good. Okay, so consider a defined risk position in Ethereum leading into the upgrade. All right, now again, if you want to see how we're going to deploy our capital, you can get into our free group, and I'll tell you how to do that in a moment. But like, you got to consider defined risk positions leading into the upgrade. Now, 2,800 structurally, very, very important. It's got to hold that. If it dips, that would be, I think it would be a great opportunity to buy more Ethereum. As we've been saying, we think Ethereum is going to 8, 10,000, 17,000 in the long run. That's long run. Long run. Okay. Right now, we're stuck in the mud. I understand that. So you can't just buy blindly because of the upgrade. You got to take into consideration the market's mood, the macro flows. They all matter. So you're going to have to trade this stuff. Now, if we're looking at Ethereum, the last time we had the Petra upgrade, it rallied 58%. Now we have this upgrade, which is actually even deeper and better for Ethereum itself. So we don't know. I mean, where are we going? What's the next upgrade going? What is it going to take us? Could it take Ethereum to 6,000? Potentially. Over the long run, yes. So we just got to be patient with it, because also we know Ethereum is basically following the old cycle. It's moving in cycles. Every expansion starts here, green zone, bottom, clean retest, then we get a parabolic rift-off. All right, now comes a fresh retest right before Fusaka drops on December 3rd. So we got the same silence before the storm that could occur. So make sure you're prepared for it. All right, now let's move over to Bitcoin dominance. What's going on in Bitcoin dominance today? Nothing. It's the same. 60, 59.48. Okay, now the rejections got stacked, the rising wedge got cracked, but it's still holding tight. So the altcoin window is opened up, just a crack. Okay, nothing's going to happen until we start to get Bitcoin stabilizing, right? So if we look at the total altcoin market, all right, we could see that we're in the wedge. All right, now Solana, ADA, XRP, all down 12%. Riskier alts are down even more. There are pockets, the liquidity pockets are collapsing out there. So altcoins are in a flush phase, not a distribution phase. This means one thing for you, okay? Smart money, you got to understand, is stepping aside. They're watching Bitcoin right now, and they're waiting for Bitcoin to stabilize. This is not the time to size up aggressively. This is the time to watch the dominance, watch the liquidity, and watch the leaders. Don't just jump into this thing, all right? So like I said, if you want to see how we deploy capital, this is how you do it, all right? You come on over to here. The link is in the description. You click this link, you'll be taken over to Telegram. Now, I saw some young lady out there said that she's kind of my age and she doesn't have these things. Well, if you want to join our free trading group, you got to get Telegram. It's real simple. Just Google Telegram and, you can get it. It's nothing secret about it, right? So right now, you click the link, we drop insane alpha trading opportunities daily in there. Hey, if you want to go it alone, 2 fabulous brokers for you. Low fees, fast execution. WeX offering some really great bonuses through our link. No fees for life. We got also BTCC, $500 token giveaway. You got a small account, $1,000 to trade with. Guess what? 50% increase right there. Great. Cool. But really, I suggest that you join our pro group. You level up your trading with us. Let's stack the stories, the profits together. The stories are more important. Building lifelong friendships there, as a trading community, that's really cool. You can't beat that. I mean, you join a trading group, it's really cool, especially if they have the same interest as you. So, all right, so let's wrap it all up for you right now. As it stands, Bitcoin at the yearly 2025 open, critical moment. Okay. Ethereum holding the line, really holding the line right now, but it's cautious. Alts, alts are flushing out, man. Patience is required with them. Liquidity cycle is turning into 2025 upside down. Okay, right now, upside. Like it's unbelievable. So volatility is loading. We got big moves coming. I'm telling you. Make sure you come on over to X. Follow us on X. We talk about Bitcoin, crypto all day, every day, because we are crypto maniacs. So what do you got to do? Well, you definitely got to think about joining our free community. What else you got to do? You got to do your own research. As you know, I am a trader like you. I am not a financial advisor. What else you have to do? You got to separate the long term from the short term. That's for sure. And if you are a short term trader, you got to enjoy the party, but dance near the door. I'll see you tomorrow. Stay safe, stay profitable, don't over leverage. Cheers.